The final expense market is projected to continue growing into 2026 and beyond. In this video, we'll look at what's driving that growth, why demand is accelerating among seniors, and how agents can position themselves to build stronger pipelines and convert more prospects into long-term policyholders. Multiple industry studies show the final expense market growing at roughly 4 to 5% annually. In 2024 alone, policy counts and annualized premiums increased at double-digit rates. This steady growth reflects both rising demand and increased awareness among seniors who want affordable, predictable coverage specifically designed to handle end-of-life costs. Before we look at the specific growth drivers, it's important to understand why final expense is different from other life insurance products. Final expense policies are not discretionary purchases. They are emotional, practical decisions tied to certainty, dignity, and family responsibility. Seniors are not shopping for maximum returns or long-term wealth transfer. They are trying to solve a very specific problem, making sure their family is not left with financial stress during an already difficult time. That makes final expense less sensitive to market cycles and more resilient during periods of economic uncertainty. Even when budgets are tight, this type of coverage remains relevant because it addresses an immediate and unavoidable cost. This underlying demand is what gives the final expense market its stability and explains why growth continues even when other insurance categories slow down. Demographics are the single biggest driver behind this market. More than 100 million Americans now fall within the 50 to 85 age range, typically targeted by final expense products. As baby boomers move deeper into retirement years and life expectancy continues to rise, the size of the addressable market will remain elevated for decades, not just a single sales cycle. Economic pressure is another major factor. Many seniors are living on fixed incomes while facing higher prices for everyday goods, healthcare, and housing. At the same time, funeral and end-of-life costs continue to rise. For seniors and their families, this creates anxiety around leaving behind financial burdens. Final expense policies offer a way to address that concern with affordable coverage designed specifically for these predictable, unavoidable costs. A large portion of seniors remain underserved by traditional life insurance. Many have pre-existing conditions or limited financial resources that make standard policies difficult or impossible to obtain. Final expense plans with simplified underwriting and no medical exams fill this gap. They provide accessible coverage for seniors who still want to protect their families, even when other insurance options are no longer available. For agents, success in this growing market starts with a reliable pipeline. That means using the right mix of real-time leads, inbound calls, and well-managed age data. A consistent flow of leads allows agents to maintain momentum, reduce downtime, and create predictable production, rather than relying on sporadic bursts of activity. High-performing agents also focus heavily on process. They work a disciplined, multi-touch cadence, keep scripts simple and empathetic, and lead conversations with real concerns like rising funeral costs and family impact. Seniors respond best to clear human conversations, not jargon or pressure. Agents who consistently follow up and focus on education tend to convert more leads into lasting client relationships. The final expense market is expanding, and agents who prepare now will be positioned to grow alongside it. The full written breakdown of this topic is linked below, with additional insights on market trends and agent strategy.